Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options.
And the last point, just going to talk about really the key macro threat in the world, and I say macro threat, is this idea of global rebalancing. Still too many exporters that want to move money, not enough importers, meaning not enough global demand in the world. And if we have a bad outcome there, meaning if we have another real dislocation here, it's not going to hurt the dollar at all from a reserve standpoint. In fact, I think you're going to see a tremendous increase in the dollar again, in the area of increased as the currency of choice to hold, because if the rebalancing comes apart based on some systemic threat in the world, whether it's China or Europe or U.S. jobs, the euro, I think, really takes it on the chin in a very, very big way. And the euro is really the secondary currency in the world relative to the dollar, and therefore the dollar would tend to take over that percentage holding. So the way we see it, the dollar really isn't challenged here, despite all the warts, as badly as, as odd as that sounds, in the U.S. Just the structure of the global economy, the monetary system with the U.S. at the center, U.S. dollar at the center, in a world where there's so much potential for systemic risk, suggests that, if you hear these horror stories on the dollar disappearing, I think you just have to turn around and walk away from them, because I think you're going to lose money if you try and play into those games. As I said before, the Asian blocks is really the area that we're going to see, I think, the increase, assuming, again, China keeps the music playing. I think no doubt we could have a cyclical accident in China, but on a secular basis, unless something happens very, very badly on the political side, and there's nothing to suggest that that's on the horizon, that the secular growth story in Asia is still there. Once they finally start to unleash their consumer, the growth story in Asia just hikes up to a whole nother notch. Not only do you have the demand content on the commodity side, but when they unleash the consumer, it really could set a whole new stage of growth for the global economy once we get through this whole global rebalancing. And as you can see, this chart, and I've shown this before, this is called the Big Mac Index, and this comes from The Economist magazine, and it's kind of a thumbnail sketch of over and undervaluation of the various currencies against the U.S. dollar based on how much it costs to buy a Big Mac in a particular country. It kind of replaces the purchasing power parity theory, which gets a little bit esoteric and boils it down into something I think most people can understand. And looking at this, it just says that if you look at the cost of a Big Mac in Norway in terms of dollars is $6.87, which is pretty high, which means the relative valuation compared to the U.S. dollar is pushing up into 80-90% range over valuation for the Norwegian krone. And on the bottom side, looking at China, it costs $1.83 to buy a Big Mac in China, and relative to that, it's about 50%. Here's the zero line going negative, about 50% undervalued. And you can see on this basis all the Asian bloc currencies in here, Taiwan, Indonesia, Thailand, Malaysia, China, all pulling up the rear here, which is kind of odd given the fact that these countries have had massive GDP growth over the last several years, which just shows how suppressed these currencies have been, and the ability for the Asian bloc to suppress their currencies to drive that whole export model. This will change, and this holding of this entire block down here will increase once we see that consumer start to come more into play, once the controls are eased, and once the capital markets start to build. I think all that will come together, and you'll see a big change, I think, in the holdings and reallocation out of the U.S. dollar. It will lose to the Asian bloc area. But this process really is measured in a number, in years, not months, not days, that's for sure. So those are, definitely the winners in the future. interesting to look at these numbers up here showing all the Asian bloc, the European currencies relatively overvalued compared to the Asian bloc undervalued. And one of the things we've said, from a long-term basis, if you can play these things and you have a very long-term time horizon, even playing the euro, which is probably our favorite thing to play on the short side, against one of the other Asian bloc currencies, short euro, long one of these guys, and I don't have Singapore dollar on here, but Singapore dollar is one of our favorite longer-term plays. Pairing those two and just letting these valuations squeeze out over time, just based on the global fundamentals, makes a lot of sense to us as we see these transitions of more and more money just continuing just to be deposited offshore. But the bulk of the money will come once the capital markets develop there. This is a couple charts here which I think really explain a lot of what's going on here. This chart on the left, this dash for cash, is from that recent Wall Street Journal article, which really came from the Bank of International Settlements study on the global currency markets, and they're just booming. 1998, 1.5 trillion passed a day across the global currency markets. Fast forward 2010, now over $4 trillion a day. It's a massive, massive amount. It's like 30 times bigger than the stock market, maybe 40 on an average day, just to give you the U.S. stock market, just to give you an idea how big this market has become. And it's not speculative trading. I mean, some of it's speculative trading, and a lot of speculative trading has increased since 1998 in the currency markets, no doubt. But this is really primarily a reflection of globalization. This idea of cross-border capital just rushing to all kinds of places for growth, the development of China and all kinds of emerging markets continuing to hike up. This whole globalization and reduction of trade barriers is what's creating this massive build in currency trading per se, or currency crossing. But again, a lot of it is increasingly speculative because we're seeing more and more of the trading switch from what used to be banks to funds and hedge funds, and a lot of that is somewhat speculative relative to what it was in the past, purely out of the banks. This chart in the center here we got from Brown Brothers Harriman, which ultimately I think comes from the IMF, and it just shows that the percentage of reserves or total reserves held in the world that are denominated in the various currencies. This bottom part right here is the U.S. dollar, and as you can see, going all the way back to 1999, it was around 70%. Moving forward, it's dropped down to around, in these terms, I think it's around 64, 65% right here, fast forwarding to 2010. The blue in here is the euro, the dark blue, showing the euro increasing slightly, as a world reserve currency relative to the U.S. dollar. The red is the British pound. That darker maroon is the Japanese yen. And this area is the other, and that other includes the other currencies, obviously, and a bulk of that is Canadian dollar, Australian dollar, and increasingly the emerging market currencies are in that group. But what's interesting, if you look at this, and to this chart, interesting to us is, let's go back to 2002, and the relative size of the U.S. dollar as reserve holdings were around, right in here, 68% or so. And we've had a massive bear market in the U.S. dollar, so these numbers are based on current dollar valuation. So if you take the old value of the dollar and you were to apply it to the percentage of reserves held now in the world, you would actually see from a volume standpoint an increase in the dollar here in terms of percentage holdings if you valued this to prior periods. And it just goes to show you that despite all the cat calls and the scare stories that the U.S. dollar is disappearing, its place in the world as the trading currency and the capital currency and the commodity driving currency hasn't changed much at all in these many years. And this just goes to show how slowly these things do change once a system is in place. So again, when you read these stories written by a lot of newsletter writers that like to frighten you and say the dollar is going to disappear by 2012 and blah, blah, blah. Just take a look at, a chart like this. If the dollar were to disappear by 2012, we better be digging a lot of bunkers because it would just be game over for global trade and the global market system.
Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts.